Hello traders, Gary Wagner here. It is 11:40 in Honolulu, 5:40 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 4th day of October 2024, and this is the evening report for gold and silver, our weekend review. Although gold prices recovered from today's low of $2,651.60, it still closed lower on the day, with December futures declining by $2.70 and settling today at $2,673.20. Silver continued to trade as a polar opposite to gold, gaining for the last 4 consecutive days, while gold declined for the last 3 consecutive days. December silver gained 15 cents today and settled at $32.44.5. The real story this week has been dollar strength. You can see that over the last 5 days, we've had consistent higher values, totaling an increase of 2.07% on the week. Today, the dollar gained 0.50%, taking the index to 102.518. Gold has declined for 4 out of the 5 trading days this week, with the exception of the $28 move on Tuesday. Even with Tuesday's dynamic $28 gain, gold closed lower on the week by $7.60. Today's surge in the U.S. dollar and decline in gold was the direct result of the September jobs report released this morning and exceeding all expectations by economists that were projecting that 140 to 150,000 new jobs were added in September. The report revealed an additional 254,000 new jobs were added last month. The unemployment rate declining from 4.2% to just below 4.1%, coming in at 4.051%. These figures paint a picture of a resilient and growing U.S. economy. It also dramatically changed the probability of a 25 basis point rate cut in November from 46.7% at the beginning of the week to 67.9% yesterday, with today's CME FedWatch tool seeing a 93.4% probability of a 25 basis point rate cut in November. So, what does this do to our current projection of gold, and where do we believe it could go over the next couple of weeks? If you recall from last week and the beginning of this week, after Thursday's and then Friday's dramatic sell-off, we posed the following question: has this incredible rally that began at the end of July, when gold was at $2,400, to the all-time record above $2,700 on Thursday the 26th, mark a conclusion to this rally? This week, gold opened much lower on Monday, giving up double digits, and then on Tuesday rose by $28. However, on Wednesday, Thursday, and Friday, we had gold decline, although on each and every day, gold came well off of the lows. My belief is that there is a high probability that what we witnessed at the end of last week, when gold hit its all-time record closing price and intraday high, that marked the conclusion of this long primary third wave, and most likely we have entered a corrective fourth wave. If in fact we are correct and gold has entered a corrective period, one technique to plot where that could take gold is a basic Fibonacci retracement, and what we are using for that retracement is we are plotting the distance from $2,400 to $2,708 and looking at a shallow retracement of either 23.6% or 38.2%. If gold corrects by 23.6%, we would expect the correction to conclude at $2,635. A deeper 38.2% correction would take gold to $2,590. If gold does in fact continue to correct, and the correction is a deeper correction going to $2,590, we created a Fibonacci extension of wave 1 using the model that wave 1 and wave 5 should be about equal in length. If that is the case, that would take the conclusion of this impulse wave to $2,759. If the correction in gold is a more shallow correction of 23.6%, that would mean that gold will conclude the impulse phase at $2,807. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.